Insurance is always considered to be a challenging issue altogether. The loading factor is very important for us. Why? Because it tells you at times that what is the cost, how much you have to cover and secure yourself. The insurance policy starts maturing year by year, age by age factor. Premiums will also start going up with that. Good morning and welcome to the session 7 in unit 4 of Principles and Practice of General Insurance, where we are going to speak about the premium loading. Now, what is a premium loading? Both being insurance in terms of life as well as in general insurance, an investment made by many individuals for the fortunate emergencies, that is the unfortunate emergencies that may occur. So we always look at insurance as an emergency purpose tool, as a factor of exigency where something might happen at some point of time in our life. But we have never thought of insurance as an investment or insurance as a factor that could help us, that could save us from any kind of factors. No, insurance is always considered to be a challenging issue altogether. Now, what happens here is that while insurance covers our unforeseen circumstances, they can even become an expensive affair with time in the name of loading. Most of us are unaware of loading concept followed by these insurance companies. Why does insurance become costly? What are the factors that makes insurance itself as a costly factor for all of us to look into? The answer is quite simple, because we never understand the terms and conditions that keeps on changing with the insurance companies. So as you start growing older, as the property starts growing older, automatically there are factors called as depreciation, the wear and tear, the factors like the usage value, scrap value. All these things are being calculated by the insurance company. So the risk factor of using an older machinery or an older spare part or an older machine altogether, car or whichever factor, they are prone to damages, breakage, accidents or any other kind of factors which might cost the insurance company a lot if you go ahead for a claim. So what do these insurance company tell you is that in order to safeguard themselves from the given situation, they definitely try to put in some extra value into the insurance called as loading. Now, loading is a concept where we try to add something more because the same amount of coverage is not available for the premium that you were paying yesteryears. Today, if you want more coverage, if you want a better perspective in insurance, you need to pay more in order to secure yourself better. Now, what happens here is that when the reason for overloading comes into picture, the insurance company first of all understands that a certain amount might be claimed throughout the insurance period, which means to say that insurance companies always work on probability. They understand that the probability of claiming an insurance by an insurance holder has got some limitations and some levels altogether. Now, at what levels am I going to claim the insurance? How frequently am I going to go back and claim it? We do not know. But then for the insurance company, there is some calculation. Now, let's assume that I'm going to buy a new car. Now, when I take an insurance policy for this new car, the assumption for the insurance company to give me an insurance is to understand that I will be responsible enough while I am going to drive the car. The assumption factor that I will continuously make mistake, I will go ahead and dash somewhere, or I will create an accident is not taken into account. But if I do so, and I go back every year to the insurance company claiming the amount, now the insurance company will become wary about me, saying that this person is definitely going to be a liability for me in the long run. So I don't want to be a part of this liability factor anymore. That's where they start charging you an extra premium called as the loading factor that comes into picture. Now that loading factor is very, very important for us. Why? Because it tells you at times that what is the cost, how much you have to cover and secure yourself. Till you are healthy and you are proved to be in terms of a lower risk of claiming your insurance when diagnosed with certain health complexities that could recur like a heart attack or your greater risk altogether. What we are trying to understand or what we are trying to build as a system here is that we want to understand what are the chances of something going wrong. That's where the insurance companies become even more aware about the situation. So moment you start complaining about a problem, moment you start raising an issue stating that this is why things are happening in this manner, or these are the chances of me getting into an hospitalization zone altogether, that means that is a signal for the insurance company that tomorrow again a mistake might happen, the risk factors might go up. So let's start claiming a higher insurance, a higher factor or premium for this person altogether. So what do we do in that scenario? Now, to cover itself from the losses that could occur from uncertainties of a customer's health insurance, the company may charge a higher premium than it did. Now, once we come to know that there is a chance of loss, consequential loss, there is a chance of a claim that could be done by a policy holder at any given point of time because of a hospitalization, because of an accident, because of an untoward incident altogether. The company will now start thinking that I have to cover myself. I cannot go on the same ratio. I will not be able to sustain at the same level altogether. So what do I need to do? I will charge you a higher insurance premium. How much will be that higher insurance premium? Based on the risk calculation factors. Now that risk calculation factors would be enabled, would be decided in such a manner that it would be kept as a very, very important coverage value for them, where they will tell you your nature of your medical history, the nature of your job, the chances whether it's a hazardous in nature, whether you are prone to any hazardous habits, all those factors will now be taken into consideration and we will rework on the premium so that we provide you an enhanced cover based on the new premium that is going to be loaded back into your policy. So now what happens here is that we will now start getting into the types of loading of how to increase the premium factor. Loading will affect both the life and health insurance. In a life insurance, the main factors that would determine your premium to be paid are the term of the insurance, type of policy, and most importantly, your age. So as we grow older, the possibilities of the factor that we are prone to communicable diseases, we are prone to accidents, we are prone to risk factors are huge. So as the insurance policy starts maturing year by year, age by age factor, premiums will also start going up with that. The second thing here is that we will also look into the type of insurance, the type of the time period that is being taken into position. What kind of policy are you holding in? Is it a long term? Is it a short term? Is it something which has a comprehensive coverage, or it is about a one-time premium? So all those factors will be now looked into it, and then we shall start claiming the insurance factor. Now, this is because the possibility of mortality is higher on an older person. So, a 50-year-old person will be charged higher than a 20-year-old person for the same policy. Now, this is where it matters. For a person who is just about 20 years today, if he decides to take an insurance policy for the next 40 years, so right now, if the age is 20, I decide to take an insurance which is going to cover me till the age of 60. So I have 40 years of an insurance backup. Now for this 20 years initially, the premium amount will be very less. But by the time I reach the age of 60, the premium amount would have gone 10 times up. The reason is that the chances of the 60-year-old person going to die or getting affected by some kind of disease or getting into an hospitalization is very much higher when compared to that of the 20-year-old person. So that is why the premium will be loaded up, which means to say that the premium will be double charged or even sometimes triple charged altogether. Now, the exclusion in insurance. Now we are going to talk about those factors which are excluded in insurance. Some insurance policy have an exclusion instead of loading. What is this word exclusion? This means that the person insured can continue paying the same premium but will not be covered by insurance in certain conditions. Now the insurance company also knows that I cannot take too much of risk as I start growing up. So what does the insurance company do? Let me not tax my insurance policy holder. Let me not ask him to keep on paying higher insurance. On the contrary, let me say that certain diseases, certain conditions, I am not going to cover. I don't want to take that risk because I know that you are prone to be affected by these factors. When you are going to be hit by these zones, I don't want to cover you. But you can continue paying the same premium and the basic insurance coverage will still be a part of your journey. But if you are going to be affected by some severe diseases or by some irreparable kind of activity happening in your life, then I am not going to provide insurance because I know that at that juncture I might be at loss. So the exclusion policy comes in where they will not cover the person under a stipulated condition. Followed by, now if you look into an example, if your insurance excludes cancer. Now we know that in India, many people suffer from this deadly disease called as cancer. You cannot claim insurance for a cancer-related treatment, or suppose your life insurance does not include death by performing adventurous activities like bungee jumping, your family will not be able to claim any amount in these circumstances. Now you are able to get the example where what I'm trying to say is that if that particular type of activity or disease is not being covered by the insurance and the insurance holder dies because under that particular condition, then the insurance coverage will not be given to your family. So that is why this insurance, the exclusion policy, comes inside. With that, I come to the end of this particular session. I hope and believe that all the information that is being shared through this presentation will be of a great help and resource to you. In the upcoming sessions, we shall try to learn more about the principles and practice of general insurance. Until then, stay blessed, stay tuned, and stay enlightened forever. Thank you once again for joining me today on this wonderful session.